Hello, I'm Mark Apsey, Head of Indexing at Thematica Research, and welcome to the week ahead. So before, as usual, we get into what we're looking at for this coming week, let's take a look at last week. And essentially, last week was full steam ahead. Everybody's getting ready for Trump 2.0. We did see initially some weakness in tech in the beginning of the week. That all kind of went away because I believe it was Wednesday. We had a CPI print that came in. It was slightly warmer. At least the top line was slightly warmer. Core was in line with expectations, and that kind of additional warmth, if you wish, was really the result of energy, which frankly is kind of a known offender in terms of fighting inflation and the inflation battle. So, the markets took note of that, but really the big news that day was that financials, especially banks, came out with earnings, and they were great. They were super strong, and so markets really took their cue from financial earnings on Wednesday, and that kind of carried through the rest of the week. So, looking at the entire week, very strong week. I mean, the kind of weakest index, believe it or not, was the Nasdaq Composite. That came in around 2.45%, which are still good numbers, for the last 5 trading days. The S&P 500 came in just under 3%. The Dow about 3.7%, and then believe it or not, small caps finally kind of came to life here and ended the week up about 4.8%. So some strong equity returns, and further, like when I look at the S&P 500, it wasn't just Mag 7 names that were pushing returns here, right? So if I look at SPY, the S&P 500 ETF, top contributors, yes, it was Tesla, Microsoft, and Amazon in the 1, 2, 3 position. But following that, Broadcom, JP Morgan, Berkshire, and then we saw Nvidia, right? So some diversification in there, Exxon, Wells, and then Alphabet, right? And then Goldman, Visa, Home Depot, et cetera. So basically some good participation, a little bit of breadth in those markets. Looking at other asset classes in the week, gold's been holding steady. It's kind of interesting because even though we saw VIX drop about almost 20% down to 15,997 by a Friday close, we didn't see any let up in gold, right? Bitcoin, again, ahead of Trump 2.0, had a pretty good week. It was up about 10%. It spent most of the week in kind of a 94 to 96,000 range, closed out strong at 104. Similarly with Ether, that had been dipping down. It touched around 4,000 maybe a week or a couple of weeks ago, traded off and ended the week around 3470. So again, still a lot of optimism with crypto. Of course, there's been stories about crypto reserves and all these kinds of things. So everybody's getting pretty happy about the prospects of cryptocurrency, about the administration embracing cryptocurrency. Again, when we look at sectors, believe it or not, materials and energy and financials all up over 6% on the week, so some good strength there. We saw some of that reflected in the Thematica suite of models as well. Looking at the leaderboard for the week, home building materials, followed by Rebuilding America, followed by chips, by the CHIPS Act model. Again, all strong returns on the week, and following these trends in the broader sectors as well. So, again, let's get back to this week, and of course it's a shortened week. MLK holiday on Monday. Also on Monday, if you haven't been paying attention, is the inauguration. And in as much as this week is going to be a light week in terms of economic data, we really only have some numbers coming out on Thursday and Friday. Thursday's the regular claims, so continuing and initial claims numbers. Friday we're going to get a look at the PMI figures, and then we'll get an initial home sales look as well. So really light week in terms of economic data, but when you think about what's happening on Monday with the inauguration, there's really kind of two events. that are happening there, which markets are going to take big cues from. One is the inauguration speech that Trump is going to give. It is not lost on markets as to who will be attending the inauguration. So it's it's Meta, it's Tesla, it's all those guys, and even a lot of folks who were usually kind of behind the scenes, really, but are now stepping out into the forefront. We're looking also to get the number 2 man out of China to attend as well. And so there's lots to unpack and kind of parse around that inauguration ceremony. Now, there's also a lot of talk about right after the inauguration ceremony, we're basically going to get flooded with executive orders. And as you know, throughout the campaign and leading up until Monday, there's been a lot of promises made about a few things, specifically with immigration reform and control. And so, we're going to see if what actually ends up happening, matches the rhetoric of the last, 3-6 months, right? And so, again, in as much as there's not going to be a lot of economic data coming out, what is in all of these executive orders, and I believe there's expected to be about 100 of them, so it's going to be a lot of information coming out, a lot of things to parse out, and markets, when they do open on Tuesday, are going to start reacting. But again, we have to see what those are. We have to see and understand what those implications are for the markets. What else is, of course, even though it's a light week economically, or at least from an economic data perspective, Q4 earnings is ramping up. So this past week we saw banks come out, good numbers. Next week is still pretty financial services heavy. We're going to have a lot more banks, smaller banks, but still a lot more banking. Travelers is also going to be in there. Interactive Brokers is in there. American Express and Discover. So we're going to get a lot of other data points about the strength of markets, the strength of trading, the impact of potentially the events, maybe not the California fires, because those really did kind of happen in 2025, but certainly effects of the storms in the storm season in Q3 and 4. Although I think we've already heard a little bit about those in previous earnings reports. Thursday, we're going to get an update from CSX and from Union Pacific, and it's going to be interesting because I think a lot of people talked about how there was a lot of sales that were brought forward in Q4 in anticipation of tariffs coming in, and so it's going to be interesting to hear how that impacted the bottom line of these companies, but also what the companies are seeing going forward in terms of demand for freight service. D.R. Horton is actually reporting on Tuesday, and again, it's going to be interesting to hear what they have to say, not only about the current environment in home builders, but again, getting back to those executive orders, if the immigration reforms and the deportation orders that Trump has promised actually come to fruition, there potentially may be some real impact to available workforces, not only in home builders, but also in agriculture as well. So, again, we got to see what the executive orders say, how they're going to be implemented, and then analysts can go and make their projections on further impact. Speaking of impact, and I mentioned tariffs earlier. Again, if the tariffs really match the rhetoric, that's going to be impactful, right? Because we're going to see immediate price increases on a lot of goods and services coming out of the country. There is potential for basically, I guess, a trade war, maybe is the only best way to say it, where if we do slap 25% tariffs on everything coming in from Canada, Canadians have, even though they're nice people, they have responded to say, well, yeah, you can go ahead and slap tariffs on our timber and lumber and everything else that we send you, but we may decide that, maybe we don't want to sell you our oil. And I think there's a generation of folks that grew up worried about kind of dependency on the Middle East for oil. I mean, to put it plainly, the U.S. has never been, well, I would say never, but it has been decades since the U.S. was reliant on the Middle East for oil. However, we definitely are reliant on Canada for oil. So depending on how this whole thing plays out with Canadian tariffs and the steps that they take to either ameliorate the situation for themselves or retaliate against the U.S. Again, that has yet to be seen. I'm sure there's an executive order there someplace that's going to outline what actions we're actually looking to take with regards to tariffs with Canada. So, honestly, that's about it. It's a short trading week, light on economic data, but let me tell you, Monday, we're going to get so much information that is going to be impactful to so many sectors of the market, and it's going to, take the full day at least to digest the big parts of it. But you're going to start to see futures moving as soon as they open, and certainly when equity markets open, you're going to see the results of those on a Tuesday. Now, whether they're positive or negative, again, it's all down to what's in the text of those executive orders. So, hope you guys had a great weekend. And, here we go. New administration, new world. I don't know. We'll see. But that's it for now. And we'll see you next time.